All right, welcome, guys. I think I think you should be hearing me now. So let's just run the intro, and right after the intro, can you hear me, Dirk?
Yeah, I
Yeah,
can.
beautiful, perfect. So I'll just run I'll run the intro, and we'll get right to it. All right, here we are. Welcome, guys, to today's live stream. Dirk is a little bit late. I'm hoping he's not
Sorry.
running out of gas. Unfortunately, that's a terrible situation you got in Germany.
Yeah, I had to fight with sticks at the gas station, to get my share of gasoline or diesel, as a matter of fact.
Yeah, wow, man, it's a crazy situation,
It is.
definitely
It
in
is. Yeah.
Europe. It's just when you thought that it might have gotten a little bit better, you're hearing that Russia is, increasing its mobilization, and then somebody blows up the pipeline. It's like, yeah, all right, good.
Okay, here we
Not
go
gonna
again.
have
Back to
it.
square one. Yeah.
Yeah, it's gonna be a long winter. Hangry Patrick is saying it's echo, echo, echo. I'm not sure. I don't hear anything wrong, so I'm not sure what's up with that. All right, Dirk, how's your week's been?
Yeah, pretty
That's the
good.
last live stream.
So far, I mean, everything. How do I put it? It's like, if I remember what we were talking about last time, it's kind of like that. Everything is coming true what we were expecting as the worst case scenario. What we talked
Yeah.
about last time, and so we are right now really heading into this direction. Massive risk off. I thought already that not last week, beginning of the week, end of last week, I thought, hey, it's nice to see, we are seeing crypto, Bitcoin, Ethereum decoupling a little bit from stocks, which is something, at least in this risk off environment, that we haven't seen a lot. Normally, you always have like 1.5 or 2 times the downwards movement, at least in crypto, that we see in the Nasdaq or in the S&P 500. And yeah, so I was actually getting slightly optimistic, saying, okay, we are getting like a life of our own here for crypto. And yeah, and when somebody comes and blows up 2 gas pipelines, and we're
Yeah,
back
and
to square one.
we had one Fed.
That also, yes. But
Yeah,
that, I mean, that was
evident.
not, that was as expected, no, what we saw there.
Yeah. Yeah, I mean, yeah, sure, of course. Like, I mean, you look at the trend, and it's quite, it's quite bearish. We had a couple of Fed speeches yesterday, I believe, and one of the members came out and says, we're moving ahead very aggressively, and there's a lot of tightening.
Yeah.
Funnily enough, he phrased it interestingly, saying there's a lot of tightening in the pipeline shortly after the pipeline.
Yeah, and I think this is really what is different from the situation we had 2 months ago, maybe, when we were like waiting for new inflation data, that everybody was kind of expecting, okay, we might see another rate hike. Back then, 0.5% was still expected. Turns out now 0.75, but that was also expected at that time. What was surprising, though, for many market participants is that the Fed really said the words, okay, we are going to stay aggressive. Means we are going to continue hiking rates, and it also means, and this is like poison for the market, rates are going to stay at a higher level for a longer time, whatever that means.
I think we had a so basically the conversation was like, if we get a 50 basis point, which is very low probability, that would be very bullish for the markets. If we get 75, that would be neutral because everyone expects that. If we would get 100 basis points, so basically when you say 100 basis points, that's 1%. So if you do get 1% hike, that would be obviously very, very bearish. But so what happened was they went out and said, so we're going to hike, we're going to raise rates with 0.75%, and we might be doing the same thing next meeting, basically.
Yeah.
And I don't think a lot of people expected that. I think they expected like 75, but then like right from the beginning they said 75 next meeting again, which is unusual to decide that, you know, at the same time as releasing the current rate. So it's very, bearish market structure. And I think what you talked about in the beginning, where you said like we have potentially seeing Bitcoin decoupling. What's the word? Decoupling.
Decoupling. Yeah, I don't know. Like English is so unphonetic. I wish.
Yeah, I need to get an English dictionary. Anyway, so it was this move right here. That was interesting, right? Because when that happened, we had, I think we can actually pull up, not like that. Let's see if we can do it like this, so we can look at the S&P 500, right? So you're looking at the S&P 500, and it's basically this one big fat downtrend. It's just, lower highs and lower lows after each other. Very clear downtrend. There's no sign of a break in market structure here. But then you look at Bitcoin, and you can clearly see here that there was a very, very tight correlation here, where you see this here, like it's basically is following each other almost perfectly, right? Goes down here, but then here it stops, right? Here Bitcoin creates a range, while the S&P 500 just continues lower.
Yep.
And Bitcoin actually breaks out of that range, so when the S&P 500 just creates that lower high, Bitcoin actually breaks the range highs. Now, and this was interesting, obviously, because it's breaking the correlation. I remember tweeting about this and saying like Bitcoin should not be strong here. There's no reason for Bitcoin to be strong here. So I'm wondering like, why is it strong? And I also said it's probably just a matter of time before we're not looking that strong anymore. And it usually, that's usually the way it goes, right? And then what I said is we have this resistance above. So if you look at the clean chart, you can see that, all right, and then you add the S&P 500, you'll see that yes, there's a shift here. There's a shift. It kind of looks like Bitcoin is running away here. But then when you actually look at the overall trend and you put a few levels on, I argue that if Bitcoin continues to trade higher, I don't see a lot of reasons for this level not to act as very strong resistance, right? Because imagine if we would have moved higher. So the invalidation of the idea of seeing a rejection here is obviously a reclaim, right? And this price action would actually be a pretty decent looking bullish break in market structure in the medium time frame. Now we never got close to that, right? We never even got above, this area right here. We kind of peaked above 20K, and that's where people got interesting. Like Bitcoin is above 20K, Bitcoin is above 20K, but price of Bitcoin doesn't really matter. It's in relationship to price action. You have to look at it. So I think we're back in risk off quite clearly, and I think the announcements from or the comments from the Fed in relationship, in combination with Russia ramping up its effort in Ukraine, and the fact that it's a major thing that the Nord Stream pipeline most likely got blown up. That's a big thing. That is like the macro happening right now, and it's most like there's not a lot of it's not a lot of not a lot of things bullish about this, right? You're gonna have a hard time finding bullish reasons, reasons to be bullish.
Absolutely not, no. And and maybe you can share my screen quickly here.
You don't have it on. I don't believe you've added it.
Sorry.
While you add the screen, I just want to say that everyone's watching. The normal discount code for PrimeXBT is 7%. I've added 5 codes in the description. They are limited, and it's only these 5 codes. If you use that code, you're going to get 10% discount on your deposit. If you don't have an account on PrimeXBT yet, sign up using the link in the description. Use one of those 5 codes, and you'll get 10% discount on your first deposit instead of that 7%. So definitely check that out. All right, I'm gonna add your screen here.
Yeah. Okay. Right. So yeah, I mean, I'm looking. Most people normally like to look at the US dollar index. For what I'm going to say here, I'm looking at euro dollar right now because it's the 2 most traded pairs in the world, most liquid there, and we really see. I mean, this is like you just said here for the S&P 500. Clearly, we see here if that is not a trend, how you find it described in books about technical analysis and literature about technical analysis, you always have those lower highs, lower lows. So it's really picture perfect. I was a bit surprised really that we went down so massively here the last days. It's really like a sell-off, and we are now at a level that I think we have not been since 2002, since the inception of the euro. I remember back then we were trading around 0.9 or something like this. We haven't been there since then. And I had, I was writing a lot on the Telegram channel, on my Telegram channel about this actually last week, because people kept asking me, don't you think it's a good idea to now go long euro US dollar? We should have reached the low. There's so much support down there, and I kept on answering to that. It doesn't really matter. TA in this environment for euro dollar, for the dollar index, doesn't really matter, at least not if you're contrarian. If you try to find tops or bottom, it won't work, because the whole economic fundamental picture is so massively risk off at the moment. So I of course, sooner or later we are going to get a bounce probably again. If it happens here right now and we get a bounce maybe up to 98 or 97 again, 0.98, 0.97, then it's just a continuation of a trend. But what might happen as well is that this trend here actually now becomes even sharper, that we go here in an even more massive downtrend. And I don't see really where it could find the bottom long term. And it's all due to 2 facts, in my opinion. Risk off, like we've been mentioning, like we've been talking here so much, and this difference, because the ECB was much, much slower, or is much, much slower in reacting to the threat of inflation than what the Fed is doing. Well, the Fed is now finally, we have to say, getting aggressive. And we are here, you can see this hopefully here on the left at 3.25%. In the EU zone, we are still at 1.25%. Of course, the ECB is going to hike their interest rates. But if you put your money into the US dollar at the moment, treasury bonds or whatever, obligations being sold by the US government, you get like 2% more. And that in a currency that is like the currency everybody flees into anyway when there's a risk-off scenario. So this is like, it's like Sodom and Gomorrah in one scenario really for the euro. And I don't see where that really can change. Now, if we look here at stocks for the moment, you might remember, if you've been watching us for a while, I always like to show this chart where I had my projection a little bit from this election pattern saying like, okay, I think we will land somewhere down here between 3,400 and 3,600 points roughly in the S&P 500. But I was expecting this actually to happen in early December. So we are way ahead of schedule. We still have like 70 days in between here where stuff can still happen. So the question now that arises for me is, maybe we're not going to have this soft landing. Maybe we're going to see prices even lower, maybe all the way down here to 3,000. Who knows? Everything is possible at the moment. Nonetheless, I think it's called. When I look at something like at some commodities, so this is now a copper chart here, we can also clearly see here that prices for a lot of those hard commodities, industrial metals, for example, so copper being one of the most important there, have come massively down also already. And if we see here where we were at the top here around about, and was that in March, we've come, if I take prices from today, copper has lost around about 35% of value already since March. And this is something we are sooner or later also going to see being reflected in the inflation rate. Now, personally, I was expecting inflation massively coming down already here in Q4 2024. Maybe there's going to be a delay and we are going to see the effects of the prices coming down, because the prices for commodities started coming down actually in March 2022 already again. So maybe this is something we are going to see in the second quarter of 2023. Finally, inflation coming down to more normal numbers. When I say normal numbers, I mean something like possibly, like 4% or 3%, still away from the 2% inflation target, of course, that the central banks have. And last but not least, Bitcoin, you mentioned it already. From me, nothing really has changed there. I was happy to see this decoupling, but we are still, in my opinion, at least in this massive sideways trend we have been trading in since mid of June 2022. So we have like almost 3 months now, 3.5 months almost in this sideways range. And as long as we don't break out to the north or to the south here, I don't see really action necessary from my side, at least, to open swing trading positions there. It's a good range maybe to trade with options, by the way, at the moment, but this is something we're now doing with cryptocurrencies here. And one thing I kind of find positive, honestly speaking, for Bitcoin is that every time we see to go into this range here around 18,000 US dollar, there seems to be quite a lot of buying action. So it seems like there are people out there that are willing to buy a lot there. And of course, I wonder in this risk-off environment, is this support there going to be strong enough really to hold the line? Or is there going to be massive sell-off once we break through? Then we are quickly going to see prices at 15 or 13,000. That is the big question at the moment if you're swing trading cryptocurrencies.
Yeah, I mean, if the first thing that kind of comes to mind when we're looking at this range right here, like let me bring up my chart here, and like the first thing I got my eyes on here is obviously like we do have this range here. I think this is the same you're looking at, but you had it more compressed. So it's a big range, and looking at if you do look at the behavior of past price action, we haven't really had such a flat long range, right? So I do like the fact that this is, if you exclude everything else, if you isolate Bitcoin and you don't care about fundamentals and macro, I would say that this does look like a potential, high time frame double bottom, which would also be a range in a pretty good area, right? But then when you add the levels and you take into consideration the macroeconomics, I don't have a lot of reason to be bullish. Like we know that the central banks are coming. Like if it shows that inflation has peaked, which I don't think we're gonna see in some time. If we see inflation continuing on the same path, and we see central banks continuing to hike rates, like I don't see Bitcoin holding this support, because the S&P 500 still has some room to the downside, right? It can still come down and definitely test this level right here. And we know that when S&P starts moving, Bitcoin moves faster. The move Bitcoin is usually bigger, right? So if the S&P 500 has actually broken below the lows here now, so we're testing this support area. And if we have a stronger move to the downside on the S&P 500, I don't think Bitcoin is going to hold the range lows. I think it's going to be too much of a selling pressure. And given the current situation, But then again, like we as traders, especially as technical traders, we don't really care about what might happen. We care about what's actually happening, right? So we try to see like what is price actually doing and trying to follow what price is doing. That's at least how I'm trading. I think you looked at copper and you talked about inflation.
Yeah, that's an interesting question here from Fallen Angel here about the DXY. I would like to talk about that because I mean
that one as well. Can I start?
Yeah, sure.
Right,
Let's see, you start first. I'll keep it in the back of my head of what I want to say and see if we align there.
This is the DXY, right? The US dollar index. And when I'm it doesn't matter what asset I'm trading, when I'm looking at a chart like this one, first of all, it's a very clean trend. This is a picture perfect trend. It doesn't get much better than this. So you look at this and I try to figure out like what's the behavior of this trend right here. Well, the behavior of the trend is it's not going up indefinitely. It's not going up forever. There's going to be a local top. There's going to be a retrace in this trend right here. And looking at the behavior of the trend, we like what I like to do is I like to use the fib tool. And I'd like to see like what levels of every move on the fib tool has been tested. And it's usually going to be, so right here, it's above the 50. And then on this one, it's on the 50. And then right here, it's on the 50 again. And here it's on the 50 as well. Well, it goes down into the reload zone. And then here on that one, it comes down and tests the 50. So we could say that, and you can also see that with every test of the 50, there's a previous horizontal level. So on every retest, there's a previous horizontal level. So if we use the fib tool from that low to this high, then let's see like where would the 50 come in? Would the 50 or the reload zone come in at a interesting support area? And right now I'm seeing this level as a pretty good level for a retest, which means that for this to be a good level to retest according to the fib levels and the horizontal levels, this needs to be the top, because you can't, like, it's not going to be here. Then it makes, well, it can be up here, right, because it's a reload zone, but I think it makes much more sense for this to be the top. And if you look at the behavior of the trend, the moves that we're getting is usually not getting this big. Now, it doesn't mean that it will repeat itself. You know, history won't repeat itself, but it usually rhymes, right? So it will move similarly to what it has done in the past. And you can also see that almost every major low in this trend is close to this gray line, which is the daily 50 EMA. So if you give it maybe, 1, 2, 3, 4, maybe a week, so somewhere between 5 and 7 days, you'll have potentially a retest of the daily 50 if this is the high. So to answer your question, do you think the DXY looks like it may retest lower? And the answer is yes. I do think that we are going to see a top in the dollar and we're going to see a retrace. I do not think that's going to be a break in market structure, though, because for that to happen, we actually need to get below this low. And that's a big move. If that happens, though, we'll see a bottom of the S&P 500. We're going to see a bottom of Bitcoin. But right now, we're in the risk of environment. All right. What's your...
Yeah. Can you share my screen again there? I think I very much agree with you, actually. I think if I look at this, first of all, Fallen Angel, absolutely right. You see here that we have been surfing the upper Bollinger Band here for a number of days now. If I look at it from a pure technical standpoint, we are overdue for a correction. And I'm actually sitting here and waiting that I'm going to get here one of my technical signals I like to rely on, called the RSI hook. So something you have been seeing here, for example, which is always a pretty good indicator if you are at the, for example, upper lower Bollinger Band here, that the market is due to correct. But I think the essential part, and Lip just sketched that out beautifully, in my opinion, is that even if we have this correction and we go down to maybe 110 or maybe even all the way down to 107 or 106, that does not mean that the market structure is broken, because we still have this clear risk of uptrend of a dollar becoming stronger and stronger. So as long as we don't, a bit crude drawn here, my trend channel, of course, as long as we don't break the structure, and I agree, this would be a very strong signal for a bottom, at least a local bottom in the S&P 500 in Bitcoin, then I do not think what change. Now, the question, of course, underlying is this something you should trade? And for me, I really always like to wait here until I have the confirmation. So until I have the RSI forming a nice, that's why I call this always hook. So something like this, and diving below the moving averages I put onto the RSI here. Then yes, I would trade this, but you have to have a pretty tight stop loss, because these contrarian or momentum oscillators usually do not work very well in trending markets. So this is where trend following indicators, something like moving averages, really shine. Because just because we are here at the upper Bollinger Bands, or we are here, the RSI is above 70. I mean, if you would have traded it in the classic way and would have said, oh, I'm entering the trade here, when the RSI is diving, is going above 70 already, you probably would have been stopped out already, because that would have meant you would have entered before this really large move to the north. So if you are thinking of shorting the US dollar index, of shorting the US dollar, so you can also trade this obviously by buying euro dollar, for example. It's the exact opposite chart we are seeing there, as I was showing earlier already. I would wait until you have a confirmation here from the RSI diving under its moving averages. I would put a tight stop loss. If that happens today, my stop loss probably would be here somewhere around 116. And as soon as we reach the middle Bollinger Band, I would adjust my stop loss to take profit. It's potentially a good trade, but like all contrarian trades in trending markets, it's a dangerous setup.
Yeah, exactly. I think I just wanted to comment that, like, first of all, follow Dirk on his PrimeXBT Academy on Twitter. You have should have the link in the description below. Definitely give him a follow. He's on YouTube and Twitter. Good educational content for sure. So make sure you give him a follow. So all right. So trading the trend, right? It's when you're going against the trend, like you said, you need to have a tight stop loss. But it's not only, in my opinion, about having that tight stop loss. You also said, like, when it hits that middle Bollinger Bands, you want to manage the position and perhaps secure the position, move stops to entry if you can, if it makes sense. Maybe take a little bit profit, just to make sure that, because you're actually trading against the trend. When you're trading with the trend, you can be more like that. You can have more room for error. But when trading against the trade, and I honestly don't recommend trading against the trade. Trend.
Thank you that you're saying that, actually, and I wanted to say that too. If you are just starting to trade, it's much easier trading with a trend. I always understand the why people like those contrarian strategies, because it's always tempting to try to catch the low or high, which you are basically what you are trying to do, if you are trading as a contrarian, but it's much more difficult. That's
I read that book.
Dangerous trading.
Yeah, there's a fairly new book called Best Loser Wins, like by a Danish trader called Tom Hoggard or something, and so it's a good book, but basically it's basically the trading in the zone in a new concept. So if you haven't read Trading in the Zone, you should definitely check that out. Anyway, he says that when we go to the supermarket, we like a discount, right? So we like a discount, and it makes sense to buy a discount in a supermarket. Let's say you have, like, you go and buy toilet paper, and it's like super cheap, the same toilet paper you usually buy, but if you buy 10 rolls, you'll get it cheaper than you buy 4. So you buy 10 because you're going to use it, right? So you go into the markets and you see the dollar being expensive, right? So you want to sell it, but the fact that one of the most used indicator is the RSI, the relative strength index, and it has zones which is called overbought and oversold, which I believe is just wrong wording, because In my opinion, nothing is expensive and cheap in the market. It's just trends. It's just trends, and the RSI is just supposed to be used as a confluence, right? So you look at RSI and you say it's now in the in the right locations. When I talk to my students and I teach them how I use the stochastic RSI, I always tell them to never use the words oversold or overbought. Just say above 70 or below 30. That's all you need to know, because your brain kind of interpreted that as, all right, so it's oversold or it's overbought, so now I can sell. But it can stay in the overbought territory for, I don't know, like 2 months. You look at Bitcoin, it had like crazy runs. If you short Bitcoin every time it hits the overbought territory, you're going to have a bad time. But then if you have, like, you add confidence, you have the Bollinger Bands, you might have a bearish engulfing candle, you see a cross on the RSI. That's when you can start saying, like, now it kind of looks more confirmed and you have more, confirmation. So I think when you also talked about the euro dollar, when you looked at the euro USD, and you said you had one guy asking you if it's a good time to buy now that it has gone so far down. And I would say that just because it's going down doesn't mean it's cheap and it has to go up, right? So I know that that's the way I thought as well in the beginning. I had a perspective when I started trading altcoins, like in 2017, and I saw altcoins that were like basically dead. Product is dead, and it's like close to zero, and it's just hanging around. It's been ranging for 3 months, and I'm like, this is cheap, right? Well, it's cheap because it's dead, right?
Yeah, it's cheap for a reason, actually.
Nobody cares about it, And so when you're looking at a downtrend, I think for most new traders, you have to switch the perspective. You have to say, the trend is down, and without really any signs of a reversal, you should probably stay short until you have clear confirmation. Contrarian trading and trying to time bottoms is very, very hard, right? Very, very hard. I know very few professional traders that do that on a regular basis and has it as the main, it's very few in my opinion. I don't know how you trade. Would you say that you're a trend trader or more like a
both actually? So I'm for my longer term positioning, I always try to trade the trend, or let's say for my swing trading positions, so positions I hold on for a couple of weeks, which is my definition of swing trading. So yeah, that is the typical trade at the moment: short euro, US dollar, long everything US dollar based, shorting the SP 500, shorting cryptocurrencies, shorting the Nasdaq, and so on and so forth. Everything we talked about. But then, of course, I also, within this trade, I like to try to have some contrarian trades as well. And what I just said here for the US dollar index, that would be a typical contrarian trade. If we see now the hook of the RSI to the downside, where I might say, yeah, I'm willing to trade this. I think the potential profit in this trade is worth the risk I'm taking. Although I might know that if I look at the statistics of setups like this, that maybe I just have a chance of 42 to 43% that this trade is going to be successful. Nonetheless, I know that because I'm going to have my stop loss when very tight, that my potential reward on this trade is going to be 2 or 3 times of what I'm risking. So then in this case, it's worth it. So it's not about how often am I right with something like this. It's more about, yeah, this is from a mathematical standpoint. If I look at statistics, it's a good risk reward trade. I am willing to take. Yeah, which FX pair usually reflects the DX the best. It's euro US dollar, in my opinion. Yeah. If you
I mean, I think I'm not sure how, but
and we overlay a euro US dollar chart, is probably going to be, just the exact opposite of it, because US dollar is
also because it's the dollar. So basically, what the dollar currency index is, it takes a dollar and then it compares it to a basket of currencies, and it looks at the relative strength. And the biggest currency in that basket is the euro.
Absolutely, yeah.
So I think if euro is moving lower rapidly versus USD, you will see the dollar currency index.
So, maybe just one like closing statement on contrarian trading strategies. What I wanted to say right now, and I wanted to show this, that the success rate of this pattern is below 50%. So, and this is one problematic of contrarian trading strategies. You have to be pretty advanced in your mindset, if I may say so already, meaning that you need to be aware of, it's hard to trade trading strategies where you have a success rate of lower than, let's say, 48% and still trust in that strategy and still trust in that you're going to earn long-term money with this. This is hard. So the likelihood of, just because it doesn't work out, you starting to tweak the strategy is very, very high. And once you start doing this, it's most of the time not going to have a good end, because you are going to mess up your whole strategy then.
Yeah, one of the reasons that I don't, like, I have a hard time when my trading system is below 50%. I've never had, because of I don't know, like mentally, like we don't like losing, obviously, but I would have a hard time. Like I know some guys have like 25 or 30% win rate on like breakout strategies, where basically they buy the breakout and then very quickly they move stops to entry. So naturally the breakout area is going to get tested. Most of the time it's going to get tested, but when it doesn't get tested, it just disappears to the upside. So you have, like, instead of having like my regular risk to reward on the trades is somewhere between 2 and 3. But if you have like successful breakout trading with 25% win rate, you'll usually have like closer to 4 or 5, win rate, which is, so you'll obviously have to have much higher win rate when you have lower, higher risk to reward when you have lower win rate. But with lower win rate comes also the problem that you're going to have long losing streaks, and you're going to lose a lot. So you have to mentally be ready to lose. And I'm I got to be honest. I'm not the best loser.
Nobody is. Nobody who does this job
job
is a good loser. Absolutely not. And this is also something from my experience that never goes away. The difference is, when do you accept it and just pull through? This is like when you run a marathon. That was just last weekend, the Berlin Marathon here, where this gentleman from, I think, Kenya, he ran a new world record. Yeah, and if you've ever gone out jogging, this point where your body tells you, I don't want to do this anymore. I want to stop now. I want to go home. I don't want to run anymore.
About 2 minutes.
Can you pull through then, or can you not? And this is like with trading. Are you able to shut down your primitive animal part of the brain? Very philosophical.
Yeah, I definitely have. Whenever I'd go into a losing streak, I always start doubting my trading system. Even if I've been trading this system for many years now, the same system, the exact same setup for years, and I had the statistics. I know that it works, but as soon as I had like 4 losing trades in a row, I start telling myself that maybe I should start scalping instead. Maybe I should look at lower time frames. Maybe I should zoom in and look at the 1 hour and the 15 minute. Maybe I'll get more trades and they'll be more successful. But that feeling, it almost never disappears. It gets better, right? In the beginning, it was so hard that I started, system hopping. Obviously, that's why most people are not profitable. They change system. But when I started, instead of changing system, I started back testing. So as soon as I had a losing streak, I back tested the system for like 6 months back, and I saw that the backtesting results are actually very profitable, but my live trading is not. So what's the problem? Well, then you quickly realize that it's my mental approach that's the problem here, because if I do follow the system perfectly, very profitable, but live trading wasn't that profitable, right? All right, gonna look at the news.
Yeah, I just wanted to see actually what's up in the next 7 days.
Well, we have a core inflation rate for a lot of CPI for a lot of
we have an inflation rate here in Germany tomorrow, no?
And euro as well. And then we have We had piece for the US as well.
I mean, look at this here. German inflation rate forecast 9.4%. I cannot even remember. Well, I think I remember back like 1990, where actually I also still was very young. My grandma had like a saving accounts for me, and we had a high inflation rate there. And you got like 5, 6, 7% interest rates on your saving account. That's such a long time ago. Crazy. Maybe we're heading there actually again. Who knows?
Yeah, it's pretty insane. I want to show a couple of trades I'm looking at before we start wrapping up here. Unless there's something you want to talk about.
No, go ahead, please.
All right, so I want to show some of the trades I'm currently in and do a quick breakdown on why I took them. And first of all, I want to show NCD CAD here. So this is a very unfortunate trade because it did actually, the spreads took us out on PrimeXBT. I do have another account on a legacy broker on Oanda. I did not get stopped out on Oanda. You see how close that is? That's insane. Look at the 5 minute. It's incredible that I did not get stopped out on that one. I feel like I should have, but the spreads must have been very, very tight right there. And sometimes when you're trading, when you're looking at a Oanda chart on TradingView and you're trading on PrimeXBT, I would recommend that you double check the difference in price, because you might have to adjust entry and stop loss slightly. Because the spreads are different on different exchanges and prices might be slightly different. It's not big in the Forex market, but there, especially when you're taking a trade like this with very tight stop loss. But yeah, I kind of want to break this down. So you'll see here, you have this downwards trending channel where you had a breakdown and then retest here. And what I liked about this retest, and the whole idea was kind of based on putting the fibs from that high to that low. And you'll see that the 50% and the 618 comes in here quite nicely. And the idea was actually kind of not the best idea, but I wanted to go short based on that candle right there. When you had stochastics RSI kind of topping out and you're hitting the trend line, you're hitting the reload zone, and I wanted to enter here. Now I put the stop loss right above the 4-hour 20 EMA right here, and I got very, very lucky. And you'll see how it just went straight down overnight. So I woke up to like TP3 hitting, but not on PrimeXBT, unfortunately. So definitely it's a reminder to double check the prices. This is the current trade I'm in right now, Euro CHF, because in the Eurozone, it seems like the Swiss franc is the strongest currency right now. Seems like it's definitely not a safe haven asset, but the inflation rate is not as high in Switzerland as it is the rest of Europe, and they're seems like they're doing a fairly good job.
Yeah, that's basically the Swiss franc is what the Deutsche Mark was back then, before we had the euro, kind of a safe haven currency of Europe.
Yeah, it was a good idea back then. Not so good anymore. So I'm currently looking for short here, and I feel like first of all, you look at the overall trend. There's no question about it. It's quite bearish, right? And the whole idea here was basically based on this, right? You have a level right here, and when I select my levels, first of all, I'm actually ignoring this right here. I don't remember what happened here, but it was some fundamental event, some economic news release, right? So I basically ignore this candle right here. But when I try to find levels, when I look for levels, I look for levels where you had like a strong reaction, right? And this level right here, and that reaction is obviously very strong, and then it gets weaker, obviously, with every new test. And this rejection here, I really like, and the fact that you broke down. So when you had that candle, I put in short orders here with stops above that swing high, and it does seem like it might play out. Maybe not this low because it's like what's 3%. By the way, euro this year versus USD has dropped over 20%. It's only 5% more to all-time low for euro USD at the I think it's 5%, just 5% lower, and we're at the listing price on most of the exchanges from 2002. It's just insane.
True. And that in a world, so we are in a world where we have legacy currencies sometimes having more volatility than cryptocurrencies at the moment.
Yeah, it's absolutely insane. I want to show this Euro NCD trade because it's I think it's very, very clean, where you have a pretty obvious uptrend, right? Pretty obvious uptrend. And I was worried about trading this at first because you had a very clear, like a pretty clear high time frame resistance area going through this level. And right here, you have a bearish engulfing candle on the daily with stochastic RSI kind of topping out here. So I didn't really want to long this until price got above this level. And what you get is a very nice break and retest on the 4 hour, right? So the way when I do my analysis, I do like a top-down analysis. I look at the daily first and I look for levels. So obviously this level was here, telling me I don't want to long until price is above that level. And then we go into the 4 hour and we'll look for the breakout. And then when there's a rounded retest, which you see right here, where you have multiple 4 hour candles between the break and the retest, I'd like to go into the 1 hour. Not all the time, but if it makes sense in the 1 hour, I'd like to go into the 1 hour. And on the 1 hour, I'm looking for a bullish engulfing candle on the 1 hour with a stochastic RSI bottom in that breakout area. And that's exactly what we got right here. My entry was a little bit too late, but I managed to get in on that candle right there. So I think it's a fairly easy way of trading, honestly.
Can you show that one again? Like, I mean, that looked like picture perfect setup right now. Yeah, with if you zoom in a little bit, exactly the location where the bullish engulfing candle is. That is really
right here.
Very nice. Yeah.
Yeah, and I mean, yeah, it's and you look at what I like also is the fact that like the fib levels are just perfect. So did that reload zone, like you hit that middle like perfectly right there, and then it puts a bullish engulfing candle, and it's actually right on when you have stochastic RSI cross as well. So the stochastic RSI cross actually happens on that candle close right there, and like you could basically trade this. And it's also like what I like is it's hitting the 4 hour moving averages, the 4 hour 20 EMA.
Confirmation. Yeah.
So there's confidence between like the daily, the 4 hour, and the 1 hour. And if like usually, I'm not trading like this anymore. But if I have time to really monitor the trade, I'd like to like enter here and below that wick. And then all the way up here to the second high is actually 4R, and even to the last local high is 3R. So just this, I mean, a 3R trade in just in like half a day is very, very interesting. Another way I like to do is like you look at the 15 minute. So when you do like you look at the daily, 4 hour, and then 1 hour, and then on the 15 minute. Now this doesn't work out on the 15 minute, but what I'd love to see is a low time frame break in market structure at the area of interest. So it would look something like this, where you have, well, perhaps something like this. You break out, and then that would be your entry right there.
And it looks like you even had a pin bar all the way at the lower.
Yeah, that would be crazy. But I mean, that's gonna be. I don't know if I would have balls to.
I would have relied on it, but it's exactly the setup you would probably see in a book about price action. Zone
yeah, exactly. It's gonna be like you see this downtrend, and right here, Like right here, that's where you put the entry, and it's gonna look like this, and they're gonna say like, look at this, it's only it's only a 16R. Buy my book.
Yeah, buy my book and do one trade a year, and you never have to trade again, man.
Yeah, exactly. Yeah, that's true. If you make a 20-hour trade, you can relax for a couple of months.
Yeah.
Yeah. People don't realize that. I mean, they see people. I see people on Twitter, they're posting like 20, 30 hour setups. And if you're risking 1% on that, you're making a 30% gain on your portfolio. And what people don't realize is if you continuously are able to take trades like that, I don't think you should. I don't think you would be on Twitter.
No, definitely not. You would be working for a hedge fund or having your own hedge.
Yeah, you would be a multi-millionaire on Wall Street, because on Wall Street they're happy with 20R a year. Well, 20% a year.
Yeah.
So if you see somebody taking like a 20 or 30R trade, it's probably very low risk, very, very low risk, because the win rate, I mean, it can't be that high. Impossible.
That's the price you pay, for high R setups. That the higher your return in comparison to your risk is, the less likely the trade is to succeed. But I mean, it's okay if you really trade 20 R setups. I don't know the exact number here, but probably you only need to be successful like with, I don't know, 12 or 15% of your trades, 20%, something like this. So that's the price you pay then, of course, for it. And it's very hard for a normal human being to really stick to that trade, because we all would be tempted, once we reach 4R or 5R or 10R, the highest, we all would be very tempted to take the profit back.
If you're watching Euro NCD and it gives us this, we might have a new setup basically repeating itself. Go down here. So it would be entry somewhere here. Not that good of an R, but still pretty good.
Mm.
But that would be what I would be watching on Euro NCD if it comes lower. All right, man. I think we're close to an hour here, and so yeah, we good discussion here on the dollar currency index and the overall market structure. I do feel like we're definitely in a very risk off an environment right here. There's not currently a lot of things to be very bullish about. It's just everything I look at, every risk on asset I look at is just not looking very good. The New Zealand dollar is looking surprisingly weak. Not sure why. I haven't really looked into that too much, but it's incredibly weak. It is against everything. So if I would be looking for trades, I would look at the NCD pairs. They have very clear trends. And I guess NCD USD would be, look at this. It's looks worse than Euro NCD. It's
like Euro US dollar, but with leverage a bit.
Yeah, this looks really bad. Euro NCD is like a strong uptrend. So Euro is much stronger than the New Zealand dollar, right? Which tells us that because Euro is a quite weak currency right now.
Yeah, but I mean, New Zealand dollar, the way I can only explain it, it's not a currency I trade very often, by the way. And I think New Zealand is, of course, very dependent on exporting a lot of agricultural goods. And we all know about the difficulties logistic chains have at the moment. So that could be one reason for it. Just a wild guess, though. As I said, I'm not trading it very often, personally.
Yeah, that makes sense. That makes sense. Obviously, with the world economy slowing down, exports will slow down, and with inflation, yeah. So that might.
Nice here that you bought US dollar token for an angel. This is basically a hedge you made there. You know, this is exactly what you also as a trader would be doing as a professional trader. You are also for your cash position looking to hedge the current trades. And just by doing this, I mean, if I don't know when you did it, if you did it like 6 months ago, you're probably sitting just from this on a profit of like 20% or 25%. So that's a great trade.
I'm hedged. I'm hedged in USD, and I've been hedged in USD from the beginning of this year with basically everything I have, which is an incredible feeling.
Especially in the market segment.
Yeah, because you look at the US dollar versus the Swedish krone. I don't know what this week is, but so since the beginning of the year, I've basically on that trade, I've made 30%.
Crazy.
That's insane.
That's insane.
Just by putting most of my money in USD and USDT and stuff like that, I've actually increased my whole, almost my whole net worth with 30% just by, and it's not, I'm just holding USD, not doing anything, which is insane because a lot of people say like, buy Bitcoin, you buy Bitcoin and then hold it, you're going to be rich. Well, you know what? I bought USD and I'm up 30%.
By what I mean, basically, you have reached
if you
super good performance. You know that every hedge fund manager nowadays would be envy of already.
Yeah, if you bought Bitcoin during the same period, you would almost be broke.
Yeah,
crazy. It's insane.
Nonetheless, of course, our task is now to find out when is the timing, or when is the time to switch back. And as you guys know, I have been switching back slowly, and I'm continuing to switching back to risk on assets. I think the next 2 months, really, the next 1.5 months are going to be very interesting and very defining. So my bet is still on early December, finding a bottom there, and then slowly we're going to see things, at least for a while, reversing into the opposite direction. It's not going to be a V-shaped recovery, where we are in 1 year at 69,000 Bitcoin again, probably. But it could be a nice bear market rally that is going to surprise people. That's my bet at the moment, but for me, for sure, the next 2 months are really going to define my strategy for 2023.
Yeah, I think it's way too early, in my opinion. I think it's way too early, but it's interesting that we don't agree. Obviously, I think it's a good thing that we don't agree. What I'm doing is basically I'm not trying, I don't really have any specific plans. I do dollar cost average into Bitcoin and Ethereum with very small amounts, just to be sure, just to be sure that I'm able to, build up a portfolio if we do print the bottom here. But basically, what I'm going to wait for before I go all in, or before I not all in, obviously, but before I increase my portfolio significantly, is basically that daily bullish break in market structure. And I'm okay with missing out on like 30 or 40% gain. Honestly, like I'm okay with that, because I know that if you're looking at Bitcoin, that would still be 200 almost 200% gain anyway. So I'm just gonna keep it simple. Wait for the bullish break in the market structure. Right now, and have a very, very bearish bias. I think we're going to break down. I don't see the situation around the world getting better anytime soon. But if it does, if there's small signs of stuff getting better, we're going to have some pretty big bear market rally. But remember that we're at the range lows. Range highs is about 30 to 35% higher. So we could still see Bitcoin rally like 30% and still be in the same range. And I think that's what we're going to see. As soon as we see inflation peaking, or as soon as we see some signs of the economy getting better, we're probably going to see that 30% move for Bitcoin, and everything's just going to explode. But we get there, right? that's also, it's important to remember that that's also a component in bear markets. In bear markets, prices don't all only go down, because in bear market you need lower highs, and you're never going to have highs if price don't move higher. So we're going to have a bear market rally, most likely. But the question is, will that be a break in market structure? And that's what I'm waiting for. We need to get about 25K.
Yeah.
And I mean, that's 30% from current prices. So yeah, it's going to be interesting to see what happens. If the market bottoms in November, December, like you might think it might will, then I'd like to invest in your fund.
Okay, I'm going to set up a mutual fund just for you guys then.
Awesome. All right, man. Thank you for joining me today, and don't forget to follow Dirk on Twitter and YouTube. He's on Twitter as PrimeXBT Academy and PrimeXBT Academy on YouTube as well. And don't forget about the 5 limited 10% PrimeXBT bonus codes, which is in the description. I'm not sure if they're still there. You can only use the code once. And there's 5, so I'm not going to give out anymore. So check that out and use the codes on your first deposit to get a 10% bonus on your deposit. All right, that's it, guys. Thank you, Dirk, and have a great Wednesday, and I'll see you soon again.
Take care, guys. See you in 2 weeks. Bye-bye.
Take care.